Post-Easter, the week builds to perhaps the most important figures since the coronavirus pandemic began, China's first quarter GDP reading. Months ahead of its Western peers, China is just now starting to come out of the other side of the coronavirus crisis, with Wuhan, the epicenter of the illness, lifting some of its lockdown measures after 11 weeks. Now, following a series of awful manufacturing and services PMIs, investors will get a look at how much damage COVID-19 has done to the Chinese economy when the first quarter GDP figures are released on Friday. Q4 saw growth of 6%, which back then was seen as a disappointment. For Q1 2020, analysts are expecting a contraction as great as 10 to 11% year on year. That would be the first time the country's economy has shrank since 1989. The GDP reading isn't alone on Friday. Fixed asset investment is set to be an improvement from minus 24.5% to minus 15% month on month, while industrial production is meant to be up from minus 13.5% to minus 7%. It remains to be seen, however, whether these potential upticks in those sort of sideline figures will be enough to soften the blow of an ugly and somewhat unprecedented, at least in modern times, first quarter growth figure. From these numbers, Europe and the US will probably get a better idea perhaps of what they are facing down the road. We've already seen, the potential contraction numbers in the second quarter for those areas, with the West having a delayed reaction to the coronavirus, with contractions of potentially 30% plus in the UK and US. As for the US this week, there is a decent stream of data, including Wednesday's retail sales and, of course, Thursday's unemployment claims. For the weekend in April 4th, another 6.6 million people lost their jobs, making it around 16.6 million people in the space of 3 weeks. Yet, once again, investors were distracted from the sheer size of those numbers, this time by a 2.3 trillion loans package from the Federal Reserve that seemed to be announced precisely at the time to distract from those figures. I think it was within around 30 minutes of those unemployment claims coming out that the Federal Reserve had announced that latest loans package. I think that's perhaps why in previous weeks investors hadn't reacted too negatively to the unemployment figures, mainly because I think every huge multi-million person unemployment claims reading was just going to push the Fed further and further towards another massive act of stimulus as they enacted last week. Whether that'll be enough this week is unclear. That figure, the unemployment figure, is now set to probably cross the 20 million mark this week. We're probably looking at another, 4 or 5 million unemployment claims on Thursday. The Fed have already, I'm not sure whether the Fed will have another $1 trillion package in their arsenal just 1 week after their last attempt at reassuring the market. So it'll be interesting to see how much the Dow Jones and the rest of the markets are actually impacted by those unemployment figures on Thursday, whether they'll actually start paying a bit more attention to them, given the increase and the increased size of the unemployment crisis in America. We're now also getting into the full swing of things regarding earnings season. Bank of America reports its figures on Wednesday, followed by Morgan Stanley and BlackRock on Thursday, and then outside the financial sector, Procter & Gamble on Friday. It'll be interesting to see if those financial firms follow in the footsteps of JP Morgan, which on Tuesday announced it was setting aside, I think, $6.8 billion to cover the coronavirus losses. Obviously, that's a huge package to set aside to cover the issue. And it'll be interesting to see whether its peers sort of have taken similarly dramatic steps to sort of try and cushion itself from the impact of the issue going forwards. Though it's likely to have its fair share of wobbles this week, the Dow Jones is actually having a pretty strong April so far, repeatedly testing 24,000, which was a level last seen over a month ago. It's sort of weathered Trump meltdowns and some nasty earnings figures already. There remains to be seen whether it can withstand a continued barrage of worrisome earnings reports like it is going to get in the second half of the month and then heading into May.